Solar energy stocks have recently been booming with Joe Biden just coming into office. It will be interesting to see if these solar stocks can maintain their high heights and maybe even push further, or if they will go back down like they have many other years. I'm the Max Invest YouTube channel and I do daily deep dives and market updates on stocks. If you enjoy the video, remember to like and subscribe, and remember nothing said in this video is financial advice and you should always do your own research. Before we get into the video, I do want to take a look at the market opportunity for some of these solar stocks. Now, I will be talking about Enphase, Canadian Solar and Sunworks as well, and I cannot get into all of the solar stocks like SolarEdge and Sunrun as we don't have enough time to do this, but I may do this in future videos. Now, let's take a look at the opportunity that solar stocks in general have. Interest rates are likely to remain low until 2023-2024, with the Federal Reserve targeting above 2% inflation. This is good because most renewable projects require a significant amount of upfront investment. Solar energy investment has grown 10 times in the past decade and is continuously growing. It is also becoming financially viable for both companies and individuals, and the costs of solar are getting reduced constantly. They are still currently relatively high, however, they are getting reduced. Costs can also be exactly the same long term for a lot of solar energies, which many individuals and consumers will like. The pace of coal plants shutting down is increasing, and this is great because it seems to go hand in hand with the pace of solar plants opening, which means we can see that there is a transition towards solar and away from fossil fuels. Obviously, this is because renewable energies are far better for the environment than, say, fossil fuels. Currently, solar only accounts for 3% of global energy generation. However, by 2030, this is expected to grow to 10% and above 20% by 2050. This implies that cumulative solar installations will also increase dramatically, and this should help our solar companies very much so. Also, Biden has rejoined the Paris Climate Agreement, and Biden does state the future rests in renewable energy. This shows there is more of a transition towards renewable energy now more than ever, and Joe Biden, being the president of the most powerful country in the entire world, should be good to kick off solar energy. They are rolling back on oil and gas infrastructure projects and replacing this with our renewables like solar. Renewable energy resources are expected to deliver 70% of new generation capacity built this year. Renewable energy mandates are also expected to kick up in the US and are already in some states. The US government and the globe are spending $400 billion on renewable, and there is a $2 trillion clean energy and renewable investment plan over the long term in the United States. So as we can see, there is a big market opportunity for the solar companies. Canadian Solar is the next solar energy company that we are going to be taking a look at. Canadian Solar is a company with a two-segment business model. It manufactures solar PV modules, which is basically the solar panels that generate energy for absorbing sunlight, and it is a provider of solar energy solutions. It delivers system solutions such as your inverters, energy storage solutions similar to Enphase, and other services. However, the other segment of its business is that it also develops, operates, sells, and owns solar power plants across 20 different countries. It provides products for utility reasons, commercial reasons, and even residential reasons, so it is one of the solar energy companies that seems to be doing everything regarding solar energy. It was founded in 2001 in Canada and has a market capitalization of $3.44 billion, and it holds 13,478 employees, making it a pretty big solar company. It has active buying customers in over 150 countries, and it even holds the world record for the most efficient solar panels. So it is quite a good solar energy company. As we can see, it has a massive global footprint, and it is in many countries, as we have already said. let's take a brief look at Canadian Solar's financials. It trades at a PE ratio of only 16, which is way lower than Enphase, and it looks a lot less highly valued as Enphase. However, the reason for this is Canadian Solar has effectively had 20 years of trading sideways. It has gone way up when solar energy seems to be doing well, and then it has come crashing right back down for a period of 20 years. Perhaps this time it's different and maybe solar energy is finally ready to take off. However, this could be another fake out, and solar energy may not be ready to take off for another 10 years, resulting in this company just going right back down to its all-time lows. However, the company does expect big things. Its manufacturing capacities are set to nearly double by the end of 2021. It has received 31% year-over-year revenue growth up to $914 million. And its earnings per share has increased to $2.31, up from $1.71. It has a nice current ratio and seems to be managing its assets and liabilities very well. Simply Wall Street predict that its future growth will be 27.7%. However, the company still does have quite a little bit of debt, which is a negative regarding its financials. It does seem like this is one of the not as highly valued solar stocks in the solar space. However, there are a few reasons for this. The final solar company we're going to be taking a look at is not one of the big solar companies. I have included it in here for those who want to look at a penny stock regarding solar companies and a bit more of a risky stock. It is not one myself that I will be considering, but it's certainly an interesting stock and has had some massive growth this year. Sunworks is a big solar company that has strategically expanded into certain states that require solar energy a little bit more than the others. Sunworks installs solar for homeowners, farmers, and businesses. Its model is a bit more simplistic than, say, Enphase or Canadian Solar. However, they do some of the similar stuff. It was founded in 2002 by James Nelson, and it has a market capitalization of only $414 million. This means it is a very tiny company. Even though its share price is between $15 and $20, hovering around there right now, it is actually a penny stock. They just don't have that many shares, and its market cap is well under $1 billion. Sunworks advertise generating your own energy and having relief from traditional utility bills. Sunworks advertise this because the rate that you pay with them should remain exactly stable for your entire life. This means you won't be stressed out about how much your energy bill will cost, and Sunworks are going to set you a very stable rate, and this is one of their big points of difference and one of the things that they are advertising a lot regarding solar energy. Let's take a look at Sunworks financials. It has a pretty good current ratio of over 1, which is always great. However, the company does have quite a little bit of debt. Its revenue has also decreased from $45 million to $29 million over 1 year, and this is a lot due to the pandemic regarding solar. However, this isn't really that great, and it does make the company pretty risky. Its earnings per share is a negative $1.16, which also means it's a pretty risky company. It is estimated, however, to improve its revenue significantly and have $56 million in revenue by 2021, which would be quite good for the company. Analysts are actually very bullish on this stock, and a lot of them are rating it buy. However, as we can see, back in August of 2020, it was trading at less than $1 per share. However, now it has spiked all the way up to nearly $17 per share. This could be signaling that Sunworks has had a massive run-up, and it's a penny stock that could be a little bit overvalued right now. However, the company may really take off and deliver on this valuation. Also, if you don't want to pick and choose solar stocks and instead you want to just buy into general solar energy over the long term, there is actually an ETF for that, and it goes by the ticker symbol TAN. Now, TAN is an Invesco solar energy ETF and has big holdings in many major solar companies such as Enphase, SolarEdge, First Solar, Canadian Solar, Sunrun, Dark House Solar, and as we can see, it has many of these big solar companies and even two of the companies that we have mentioned today. This means you don't need to buy into way overvalued like companies like Enphase. You can just rely on the sector. However, it is also true that the sector has ran up a significant amount, and TAN has also followed and ran up massively this year, over tripling in its share price in the year. So the entire sector could be a bit overvalued right now, and maybe if you're looking for an entry point into TAN, you may want to wait for solar energy stocks to cool off, come right back down, and that's when you get in before they have another big run up. That's what I'm considering with solar. I don't really want to pick and choose the solar companies. I'd rather look at the entire sector over the long term. I'd also rather wait a little bit before I bought solar energy right now. However, none of this is financial advice, and you should always do your own research. That brings us to the end of the video. If you enjoyed it, remember to like and subscribe. I do daily stock market videos, maybe missing 1 or 2 days a week if something's on. Thanks for watching.